There's a huge amount of liquidity flowing in the world. So what is the implication and impact of that going forward?
There is a huge amount of liquidity.
Liquidity, yeah.
So what is going to be the impact? Bhatta?
The impact of liquidity.
Yes.
So you missed Durgesh's first point?
Maybe I was in.
What is that?
He said something right at the beginning. You missed that?
Elaborate.
Maybe I would listen from you then.
You make only 20 investment decisions in a lifetime.
No,
So the fact that there is liquidity has nothing to do with investing.
No. My point is, I mean, what are the implications, broader implications?
There are no implications. That's my answer. If you have to make 20 investment decisions in a lifetime, then liquidity is not one of the reasons to make you for you to make an investment.
But are you and me going to follow that?
I said right at the beginning, you are obviously a little drowsy at the beginning. What did I say right at the beginning? That I don't deserve to be here because I find it too difficult to behave like Buffett. It's incredibly tough to behave like Buffett. I admitted that first thing before I said a word. It's very difficult, you know, you're highlighting this point that I make to other people. That Buffett can say for the next 100 years if he lives to be 184, what he says, but human beings are not going to accept it. So Buffett has been defeated by humanity. That's his ultimate, the way he's been conquered.
Yeah. I think while we go on to the next question, we have a question from Delhi from Mr. Sanjay Durgan. This is for Raamdeo ji. He is asking, in your investment philosophy, buy right, sit tight, how long will you really sit tight in the portfolio? And what will really drive an exit from your investment position?
Yeah, so basically what's your sales discipline?
Yep.
I mean, basically we sell only for two reasons. One is either we are wrong, we are very prompt in recognizing we are at fault and we cut the losses. So that's a fundamental difference between amateurs and us. Amateurs, they love booking profits, we love booking losses or cut losses. So that's a fundamental difference. Well, that is one. If I am my story is wrong, I'll definitely book it quickly. But if the company goes wrong, because another big mistake which companies do is they do massive misallocation of capital. Then you have to definitely sell it. Third is, of course, there is a complete euphoria about valuation, and our 5% allocation has become 18%, 20%. Obviously, we have to cut it. I mean, and I will cut it if by chance the valuation still remains reasonable for me. I'm pretty happy staying at 18-20% allocation. We have demonstrated that. Stock after stock, we have gone from 5% to 18%, 20%, and we have lived there. And only when it becomes really expensive, then we cut it.
Right, right.
Can I just add to
what
Raamdeo said?
Yeah, sure.
This is a practical thing.
Yeah.
What Raamdeo said is the real logic behind it. But always be keen to sell mediocre businesses before you sell great businesses. Suppose in any portfolio, there will be 5 or 6 really high quality businesses. Then there will be 5 or 6 good businesses. And there will be 5 or 6 duffers, gruesome. Start with the gruesome. You know, this valuation logic always gets applied to the great businesses. And you start by selling the great businesses, psychologically you hate to take losses. Because the gruesome businesses are anyhow at a loss. And we don't want to accept they are stupid. Yeah. Because what is it? Taking a loss, accepting that you're an idiot. So the ego prevents you from selling the gruesome ones. But practically, if you think about selling, you should sell the gruesome ones first. And try and sell the great ones last, all other things being equal.
In fact, we did this particular thing very recently, where I read one Steve Jobs quote, where he said, a good management in automotive industry, if it is 1x, the extraordinary is going to be at best 1.8 or 2.
Yeah.
But if it is in software industry, it will be at least 25 to 1. Yeah. My sense is the management of companies is far more exponential than even software.
Yeah.
So a great management is at least 100x of an ordinary this thing. I'm just supporting what Bhatta is saying. So when you have a 10x, the great business, which is 10x to the average, and 10x management, the result is not 10 plus 10, it is 10 into 10. And that's how you get an Infosys
100 bag.
or a Sun Pharma or whatever, Nestle and things like that.
Right. You want to add something, Durgesh bhai?
No, I mean, just what Raamdeo mentioned, Vallabh bhai has this quote that your assumption is that you buy right. So assuming that you got the right stock, you sell either when the market goes mad or the promoter goes mad. So there is a situation, if you look back, that Wipro went to a market cap of 2 lakh crore. Azim
Market
Premji
went
did
mad.
not do anything wrong.
Yeah.
And then there are several other examples where, the promoters, when their stocks went really high, went into various acquisitions or diversifications.
Yeah.
And that was the time to sell them.
Yeah.
So I guess that probably is what may be the answer to.
Sanjoy, you think the market has gone mad?
Right now?
Yeah?
No.
No? Okay.
I think, I was
Referring to a class of the market.
I think I was speaking to Durgesh before we started this, and what he said, I think, is really, it's absolutely right, and it's very important. Right now, we are in what I think is a two-tier market.
Sorry?
We are in
Two-tier
a
market.
two-tier market.
Two-tier.
There are God stocks and there are outcasts.
Dog stocks.
And there's
God
nothing in
stocks.
between. So you either own God stocks
Or dog stocks.
or PSUs. The outcasts are called PSUs. And they are condemned. They are over. Their story is over. Because nothing matters there. All that Raamdeo said is irrelevant there. The hen, the egg, the dividend, all of that is bullshit. None of it matters.
But he has got an even better concept.
Huh.
Ramdev, tell me 10 stocks, buy and die.
Buy and die.
Die.
Yeah.
Meaning you hold them till you die. What? No, then? What is buy and die?
Buy, you will die.
Oh, buy and you die. Acha. Okay.
Yeah.
Acha. I thought you were talking of the Phil Fisher thing.
Yeah.
Buy forever, kind
Yeah,
of.
bye forever. Okay, can we have the next question, please?
Hi. My name is Arvind.
Excuse me, 1 second, one at a time. Yeah, can you go ahead? Yeah. Sorry.
Yeah, thank you. I think it's common sense that you cannot have a great business without a great management. End of the day. So
Wrong.
Wrong.
Absolutely wrong.
Yeah.
I can name you 5 businesses which are great businesses which have had pretty mediocre management and the results have been spectacular. Let me start. Smith Kline Beecham Consumer Healthcare, Horlicks. It was run by a bunch of guys who went to Delhi Gymkhana to drink gin and tonic at 12 in the afternoon. And that's why the company did so well, because senior management didn't get in the way of the business prospering. You don't need to have geniuses to run businesses, boss. As long as they realize that they should do nothing, just let the business grow on its own.
but those would be exceptions. Yeah?
No, I can keep on.
People
I
are
don't
capable
want-
of spoiling a good business.
I don't
right?
want to humble, companies by naming them, but this is a common misconception. In fact, there are many businesses, the businesses are superb. It's just, and they're run by pretty mediocre
So you
people.
shouldn't even bother about the management in that case.
You
if
should
like the
bother
business.
only about the integrity of management when you find an outstanding business.
But then how would a lay investor kind of
How do
try
you
to do
judge
that?
the integrity?
Yeah.
Cannot.
So that's an interesting question. So the judgment of integrity relates to 5 or 6 different dimensions. It relates to, for instance, one of the best ways to judge integrity is you take 2 companies in the same business, very similar lines of business, and you look at the performance over 10 years or 15 years, and you see whether there are significant differences in operating margins, free cash flow, per unit of sales. And if you see that there's a significant difference, 5-10% per unit of sales, then you know that there's a tap which is leaking somewhere. And there isn't a plumber around. And you can see this in India all the time.
So it's by virtue of that, you're picking the leader in the industry or the sector in that case.
The leader may be crooked, may be run by a crook. I don't want to name some very nice capital intensive sectors which have had great visionary leaders and great market share and great dominance. They haven't paid tax for 20 years. They're global, they're globally competitive, global scale,
I think Sanjoy
but there's a leak. You got to
Sanjoy
fix
is an
that leak.
encyclopedia of investment, so you can carry on this discussion later on. We can have the next question in the meantime. Please go ahead. Sorry, you can go ahead with your question.
No, I
please.
think my question was asked by the other gentleman. I had actually, but carrying forward from where you left, how do you tell, so companies which have a history of 10 years, 15 years, yes, it's easier to do the comparison. How do you judge integrity on day one for newer businesses? Because, like Raamdeo ji said, when you see a big ball coming, it sometimes is, in a business like a Just Dial, for instance, wasn't there for very long. How do you tell integrity in businesses that are relatively recent?
Very difficult. Only time will tell you. You got to give it time. You got to have, there are some things, it takes 9 months to get pregnant.
But is integrity static? Do you start out, if you have integrity at the beginning, does it mean that you will continue to have it till the end? What if you fall
There's a
by the
very
wayside?
colorful phrase in Hindi. I don't want to repeat it in this august audience because there are some women present, but I'll try and give you the gist of it. Okay? People who are crooked, they never reform. The tiger never changes its spots. We all want to believe desperately that people are reformed saints. Sadly, there are no reformed saints. There are some saints in hiding, in disguise. They are posing as saints when they are not saints. That's the most tricky group. Because you are fooled into believing they are saints. But no one ever, so one direction never happens. That is, the crook becomes a saint. That never happens. But there are many who start out reasonably honest and then say, I'm a businessman, yaar. How can I be honest? You've never heard this line? I do business, boss. मैं कैसे करूँ यार? मेरे को तो धंधा करने का है ना? How can I be honest, yaar? So that is a very common journey. You start out noble, honest, good intentions, and then you go down the slippery slope.
If I can, I think one of the, in newer businesses, younger businesses, of course, there is no track record, not so much of research, but clearly there are some, kind of thing like, say, tax payment track record, or, the suppliers, what are the views of suppliers or some ex-employees. People have to swear by those managements, and you can feel it, when you walk there, instead of one interview, you have to probably do 2 interviews, 3 interviews. But you get much closer to that. There is no perfect answer, even in the old companies. But it's not that you cannot judge. People ignore. I was one where I ignored a lot of very clearly. Even Motilal ji telling me that this company is bad. Be careful. I met a lot of investors. They said be careful, and yet I ignored. So that's Bhatta himself ignored. He cautioned me, and yet you don't listen. That's not the way to go about it. You have to be very careful about the integrity part of it.
And dynamism is not equal to integrity. There are many very dynamic people.
Yeah, that's a competence.
But dynamism is not equivalent to integrity.
We have another question from Abhijit from Pune. So for a lay investor, how does he understand quality? Durgesh bhai, over to you.
Obviously, what Raamdeo ji mentioned at the beginning, that ROE is one of the indicators of a good business. Over time, at least, it should have a high ROE. May not be in a particular year, but over time, having a high ROE, and that I think would be a good indicator too. And another thing about great investments is that if the business can handle additional cash at the high ROE, that I think would be a wonderful business. So if, as Raamdeo mentioned, that a company can make high profits without additional capital, that is good. But if it can handle more capital and still grow at a higher level.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.